What's up guys, my name is Curtis and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. In this video, I'm going to explain what Roth assets are and why I feel they should be part of your retirement investment portfolio. To understand the benefit of Roth contributions, we need to take a step back and look at how traditional retirement contributions work. The two most common types of retirement accounts are the 401k, which is employer-sponsored, and the IRA, or the individual retirement account. When you put money into a traditional 401k or a traditional IRA, that money is considered pre-tax and it grows tax-deferred. What I mean by this is that you don't pay any taxes on that money in the year that you contribute it. Once you get to retirement and begin withdrawing money out of the traditional accounts, any money you take out is considered normal income and is taxed accordingly at that time. So you lower the amount of taxes that you pay the year that you contribute. However, when you withdraw, you're effectively paying taxes on both the contributions as well as the growth of that money in that account. If you choose to put money in a Roth account, those contributions are not considered pre-tax, but after tax. However, they do get to grow tax-free. What that means is, instead of lowering the amount of money you owe in taxes the year you contribute, you still need to pay taxes on your entire income. The benefit comes later. Since you've already paid taxes on this money, you don't have to pay taxes when you withdraw it in retirement, and that includes both your contributions as well as any growth of the account. Let me illustrate this with an example. Let's assume two people, each making $50,000, are contributing 10% of their income to an IRA. I just chose 50,000 and 10% because it makes the numbers easy. The only difference is going to be that the first person will contribute to a traditional IRA and the second person will contribute to a Roth IRA. Because the first person chose traditional contributions, their taxable income actually goes down to $45,000 because they put $5,000 into that traditional account. The second person, however, still does have to pay taxes on that money, so their taxable income stays right at $50,000, their full income. Given the current tax brackets, this means that the first person who contributed traditionally actually saves $1,100 on their federal taxes this year. And also they would save even more if they live in a state with state income tax. So the person that contributes traditionally gets to save $1,100 that year, potentially a little more. So why would you want to contribute to a Roth account? As I mentioned, the benefits of Roth accounts actually come toward the back end once you start withdrawing in retirement. If both people kept the exact same salary and contribution rate their entire life from age 25 to 60, now 59 and a half is when you can withdraw from retirement accounts, so we're just going to use 60 here. Depending on the average rate of return, this would be the amount of money in their retirement account after 35 years. If we take the 8% rate of return just as an example, the account's worth about $860,000. The person who contributed to their traditional IRA would have to pay taxes on any money that they took out of there. If they took $100,000 out, they got to pay taxes on it. If they took $10 out, they got to pay taxes on it. The second person who chose Roth contributions would not have to pay taxes on any money they took out. Although I definitely wouldn't recommend it, they could just take one giant lump sum of $860,000 from their account and not pay a single dime in taxes. This is the real power of the Roth. You get comfort that you know you won't have to pay taxes on any money that's in that account once you start withdrawing in retirement. The larger your account value is when you retire, the more beneficial Roth becomes. It's also important to note that tax brackets are constantly changing and evolving. And yeah, maybe your tax bracket could be lower in retirement, but I wouldn't really count on that. I would actually bet against the opposite. So if you want to retire with the comfort of knowing that you won't have to pay taxes on any money that you withdraw in retirement, I would definitely recommend looking at Roth contributions, whether that be in a 401k, if your plan supports it, or an IRA. And if you're interested in lowering your taxable income this year, but also building up some Roth assets so you have some tax-free money when you retire, there's no rule against putting some in Roth and some in traditional. You could put a little bit in both and get the best of both worlds. Guys, thanks for watching. If you enjoyed this video, I'd love if you left a thumbs up. It would really help me out. And please consider subscribing if you want more videos like this in the future.